scale past about the 9,000, 9,200 band.
Okay, that's that on Bajaj Autos. But let's welcome on board Sandip Sabharwal here in the studios and find out what he's liking in this market. Sandip, morning. Let's start off with two-wheelers first. Bajaj Auto, of course, you closely track. But if someone were to add positions here, what stock would you recommend?
So like Kunal was mentioning, Hero MotoCorp, TVS, all of these stocks have done very well.
Yeah.
So there is less valuation comfort there. Now Bajaj Auto is something which we have been accumulating on every dip, expecting that the exports will do very well and the export earnings will be stronger because of the rupee depreciation. So I think that adds to their margins. Domestically, of course, they have lost market share. So I think that's something we need to see whether they can revive that or not. EVs, they are doing well. So the overall space actually is pretty well placed, but because TVS and Hero MotoCorp have run up substantially, so there is lesser valuation comfort in the near term.
Yeah. But anything within PVs or CVs where you think there is valuation comfort?
I think PVs, M&M, Maruti, I think both of them will continue to do well. And on the CV side, Ashok Leyland has been outperforming expectations in terms of volume growth lately. And there is an expectation that there will be a revival in the CV cycle, although it might not be very aggressive, relatively shallow, but then still that's the only, although Tata Motors has now demerged, but Ashok Leyland with its focused operations could do better.
Okay. In what part do you see value within the auto pack? Is PV better placed or is CV two-wheeler the better play? I know you've spoken about two-wheeler a bit, but do you therefore like PV a little more than the others?
I think momentum will remain more in the PV side because I think the GST rate cut fillip in volumes and sustained volume growth is seen more on the passenger vehicle side than the other segments.
Just looking at the charts of Interglobe Aviation as well, from that 52-week low of 39.45, and Kunal, you would throw better light, I guess, on this. What exactly was the low when all these flight delays and cancellations trouble started? And have we covered ground now?
46.45.
46.45.
That was a low, and I think yesterday we hit 5,000, 5,050 mark for Interglobe Aviation. But I think broadly, when you look at this, after a 1,400 point correction from 6,000 levels thereabout for Interglobe Aviation, the stock is just trying to come back into a mild recovery. You know, it's going to be very difficult for the stock to go into a big recovery, say come back to 5,500, 6,000 plus mark in a very short span of time. These kind of rallies, they generally shape up over a period of time for stock prices, especially after such kind of a sharp news flow. So I believe in that context, the base or the support for the stock, I think it's been set at this 4,800 levels thereabout, but the journey towards 5,500, 6,000 mark will take some time.
You know, the other one that made news, Sandeep, is the fact is IndusInd Bank, where you had HDFC Bank come in and suggest that they're willing to buy around 9.5% stake. Now, I know this is an enabling, kind of approval that they've taken from the RBI, and it kind of and for viewer context, it kind of combines all HDFC entities, all subsidiaries of HDFC, HDFC Life, HDFC AMC, all of those stakes combined should not exceed 9.5%. That's the RBI mandate. And they have 1 year to kind of bring it to 9.5. The other piece also that viewers you want to keep in mind is in February of 2024, HDFC Bank had received a similar approval from the RBI. So this is not new either, and they haven't hiked stake. If at all they were to do, I was just going through shareholding and trying to figure out as to how much will they hike stake by. HDFC AMC already owns around 4.5% of IndusInd Bank. But this approval, Sandeep, just sentimentally, could it tilt flows towards an IndusInd Bank, given that it's trading at one-time book, not expensive, Nifty 50 counter, not a very large-sized book, new management coming in, a CEO with a proven track record. So some of the positives that I've highlighted could well work in favor of IndusInd, do you reckon?
So this news is actually no news because it's just a technicality. Because across group entity, you can't hold more than 10% in a bank.
Correct.
So that's why this has happened. So I think these are RBI regulations. People shouldn't focus too much on them.
Sure.
Secondly, management changes. If you see the history of management changes in banks, it takes time for the new management to revive the bank. So first the cleanup happens, then the growth revival happens. So has the cleanup happened or not? We are not sure. So I think next couple of quarter results will reflect that. And post that, I agree with you that the new CEO has a good reputation and a conservative banker. So to that extent, the revival cycle will play out, but I think it will take time. So no one should expect very fast revival. In financials, fast revivals don't happen.
Yeah. But Sandeep, if you had to, put in fresh money into any of the banking counters, A, would it be banks at all, and B, if so, which ones?
So banks, I think it's the larger one. It's a standard list. So in terms of, let's say, among the large 4-5 banks, in terms of valuations, Axis Bank offers more valuation comfort. ICICI Bank offers more of stability. And then SBI is a re-rating candidate. So I think that depends on how well their credit growth plays out. So if credit growth picks up and they have been able to maintain the asset quality, then I think further re-rating in SBI is also possible.
Okay, on that note, let's take a very quick break. Come right back. We'll continue our stock chat with Sandip Sabharwal as well as Kunal Bothra.
Ishika, thank you so much for that. But Sandeep, view with regard to IT, I know you're positive IT, but within what pack? Mid cap, small cap, or would you prefer the larger cap players which are now trading at a decent discount to their 5-year averages? Would you not look at the 5-year averages now that AI has come into the picture? And would you look at IT very differently from what you would maybe a year or two back?
So I've not been very bullish, but my view is that it's a more of a defensive sector right now.
Sure.
Where it has tailwinds in front of it because of the rupee movements, because especially in the European operations, the way rupees moved against the euro, I think it gives huge tailwind to the profitability and for them to win new contracts. The issue, like you said, has been AI and the lack of initiative by most of these companies to make a foray into those kind of initiatives. Now TCS is trying to do it now through some acquisitions, entry into data centers, etc., which could potentially play out. So if that plays out, then we could see another re-rating cycle for TCS specifically. Smaller companies will still see volatility related to clients, etc., because there's still uncertainty related to discretionary spending. So I'll say that it's a sector which will, like top line growth of companies will be maybe 5%, max 10% in a very good year. So the return potential of this sector always will remain, I think, maybe 10-12% at best.
Now, you've liked IT for a while, and it started off with your bullish bias on Infosys, and now it's trickled down into smaller names. What could be a good buy at this juncture? And more importantly, the point that Sandeep was making, how much of the strength in IT correlates with rupee weakness?
Yeah, I think that's the point where I think if I'm not wrong, IT stocks start to come back into momentum zone at a point when rupees start to depreciate a lot more, or the pace of depreciation start to accelerate. That could probably be acting as a benefit for the IT index and the IT stocks. Right now, we are at a point where we are, the IT sector is opening up a lot because you don't have just the likes of Tech Mahindra from the large cap names which is outperforming, and then maybe Persistent and Coforge. You have other names which start to participate. In fact, TCS is now almost 1% off from its 200-day moving average, at a point where many of the other IT names have already crossed about those levels. So that tells you that even the weaker of the stocks in terms of relative price scale, that stock is also starting to look a little bit more attractive from the IT pack. Wipro is also one of the more underperforming stocks from the IT pack. That stock is also nearing its long-term moving average breakout. So the sector is getting a lot more better. The most weakest stocks from the entire IT pack, even these stocks are making a comeback. So I think one has to try and pick and choose the mix over here, because now, like before, maybe a month back, you were dependent on just maybe 2 or 3 of the prominent large cap names or the mid cap IT stocks to try and take the baton forward. Right now, the mix is a lot more diverse.
Kunal, you called media, and the Nifty media was the top sectoral gainer yesterday, and that's why it props up on our radar as well. continue to be bullish with regard to media? And how do you play this theme? You seem to be super bullish the last time we spoke. Give us your sense and how do you play?
So, again, it's more of a statistical measure which we were discussing. We are at a 3.5 standard deviation for the media index with respect to many of the other sectors. Now, that's a huge aberration as compared to this performance of the sector with respect to many of the other sectors. Now, there comes a point where there is an immense amount of excess, either on the upside or on the downside. I think that's getting formed for the media index and the media stocks. In that parlance, you look at the mix of media stocks. There are, I think, almost 7 or 8 names, if I'm not wrong, in the media index. The likes of PVR, Hathway, Prime Focus, and
Sun.
Sun TV, Z Entertainment. So these are the few names which are there as part of the media index. So that I believe could be a mix. One has to try and pick and choose the stronger stocks. So in every move which we've seen, and if I go back say 3 years or 4 years back, this was the same kind of an aberration which we had for defense names, for the railway stocks, where at one point these stocks or the ratios for these charts were at a significant disarray as compared to the other sectors. Then what you saw in the next 2 years post that was a major
Parabolic
rally.
move.
Yeah, exceptional rally, something which took the markets by a big surprise. So I'm not saying that similar kind of rally can shape up, but then there are pockets within the media pocket which starts to look very attractive. So whether you look at PVR Inox, that stock is start to look very attractive at current levels. Maybe that could be a bit of a surprise. Prime Focus is something which in the last 1 month I think has done reasonably well, and it's one of the very few media stocks which is actually trading at a multi-week, multi-year high.
Sandeep, what do you like? I mean, while of course it's largely PVR and Sun which are widely tracked, but any of the smaller media names?
No, not tracked for several years.
Not
Only
even PVR?
PVR we own. So I've been bullish for a long time, but it's not performed. But
It
hopefully, I
only
think it will
performs
perform.
with box office successes. It's always time to that. But yeah,
So there was a phase where a lot of movies were not doing well. Now there's a phase when a lot of movies are doing well. So I think people will recognize that it's not a one-way thing, and the valuations will at least come back to mean. So I think that itself could create a reasonable upside.
yeah, it's been lagging for quite a while. Yeah. Go ahead.
Yeah, sorry, switching focus, cement. Does that look attractive? This has been a sector which maybe over the last 3 to 4 quarters we've spoken about price hikes which have not come through, infra spend which also did not come through, and it's been lagging. Do you believe that the environment is shaping up well now? Monsoon behind us, we're into the winter, we've got 2 quarters ahead of us where execution can pick up and cement demand can go up?
No, I think demand increase will happen, but the only issue is supply. Because last couple of years demand increase has not been so much and supply increase is quite rapid. But this is one industry where the companies have transformed themselves into becoming much more energy efficient, and the kind of power savings they have done. So cement prices, if you see, are the same which they were years back, but the company profitability is much higher. So I think that's helped the stock prices sustain. There are no triggers for a significant upside near term.
Okay, no triggers for a significant upside in the near term. A lot of stocks to talk about, but let me first take it across to Kanishka. Tata Power is going to be in focus today. The company has targeted about almost 10,000 crore rupees net profit over the next 5 years in an analyst meet. Kanishka is here with the takeaways. Kanishka?
Absolutely. So Tata Power is going to be one of the stocks we'll be watching out for today on the back of its very ambitious growth roadmap that it has laid out for FY30. That's basis the analyst meet that it had yesterday. Now, it aims to more than double its EBITDA to that 30,000 crore rupees level and PAT to 10,000 crore rupees level by FY30. This, it says, would be driven by 2 business segments, that's renewable generation and the T&D, that is transmission and distribution segment. So these 2 are going to be the key growth drivers. In the distribution segment, it says that the customer base, that's targeted to scale sharply to nearly 40 million by FY30. And that's up from 12.8 million in FY25. So that's a huge uptick that they are expecting. While in the transmission segment, the network that's expected to expand to 10,000 circuit kilometers. So yes, big expansion plans over there. If you talk about the renewable segment over there, they are expecting installed capacity that's planned to rise from nearly 7 gigawatt to over 20 gigawatt by FY30 with an annual 2 to 2.5 gigawatt addition in captive generation. That's from FY27 onwards, that is April next year onwards. The total capacity that's targeted at 30 gigawatt by 2030 with renewable contributing about 20 gigawatts. Now, it is also in advanced decision on a new SPPA mechanism for the Mundra plant, which is temporarily shut down, which could enable power scheduling from January 2026 onwards. So yes, very ambitious plans for the long term. However, it has trimmed certain estimates as far as the capacity is concerned. It has lowered the renewable capacity to 20 gigawatt. Its target, earlier the target was at 23 gigawatt, and the total installed capacity target to 30 gigawatt from 33 gigawatt earlier. So yes, slight lowering of capacity targets. However, the PAT and EBITDA targets, they have been increased, and they're expecting them to more than double by FY30.
Okay. Some of the power plays, Sandeep, what within the energy basket are you liking, and how would you play it? And let me try and broad base the question a little more. Ancillaries, there could be lenders as well. PFC REC trading at maybe 1.1, 1.2 times book. And then you have the core power gen cores as well as battery and energy storage. How would you play any of these themes?
So generating companies normally I don't buy because they are very capex intensive and the return ratios tend to be very low. So I think at very cheap prices these stocks presented value, but then they ran up, and after that, so I don't see too much value in the generators. I think the equipment suppliers have a strong tailwind, both in terms of the transformer companies, the transmission line companies, or the battery energy storage companies. So all of them I think have tailwinds for the next few years. So I think the better way to play are the equipment companies rather than the generators. And the lenders, PFC, REC, I am slightly skeptical because of the huge exposure they have got on the renewable side. Because I believe that it's a risky segment to be financing they are only financing those projects.
Sure.
And a lot of these projects are finding it difficult to get financially closed or signing PPAs, etc. And the kind of oversupply that's building up on the solar side, it should be concerning. So I think I would be slightly skeptical on PFC REC.
Sandeep, today the Shanti bill, which is technically the nuclear energy bill, is going to get tabled in the parliament today. You think lots of capital market opportunities will arrive?
So I think it will be a very slow process, because as getting approvals for a nuclear plant to be set up will be also time consuming, and then each plant will require maybe 10 years to set up. So I think it's an opportunity which will open up, but in the long term only.
So your typical L&Ts of the world types?
Yeah,
as of now.
Yeah, so people talk of the smaller companies also who have done solar plants earlier, Walchand and this HCC and all, but it will take time. So prime beneficiary of any such change will be L&T only because of the credibility around them. But other players will also get their fair share. But the earliest anything will happen, I think, will be after 2-3 years.
Okay. Kunal, PFC, REC, some of the lenders in the power space, is that something you like on charts? How are they looking?
Lacking momentum completely.
Absolutely.
So these stocks are below their 200 DMAs, 15% margin. So you can say that these stocks can have a mean reversion phase, but then it's always better to wait for that first leg of momentum to come in and then try to catch in the stock price trends. But in the last 1 month or so, these stocks have been dragged all together. I think 339, 340 is where the likes of PFC, REC, both of them are trading right now. They look weak on the charts as of now, so not a buy. But then maybe I think at some point of time, say over the next couple of months, like what we had for the IT stocks, when there was too much of an excess in terms of the negative trend, there comes a point where the risk reward looks attractive for these stocks, and there is a scope where the momentum picks up. Maybe that phase will also come in for these names pretty quickly.
And what about the delivery?
That's an interesting chart because on the short-term basis, it looks like the stock is forming a base at 400 mark. I think if I'm not wrong, March, April, May is where the stocks had formed a low around the 300 levels. And from there, we saw 30%, 35% recovery for deliveries. So I think in that context, the stock has done reasonably well in the last 4-5 months or so. Even in the short-term charts, it's been holding on to its 200 moving average, which is around the 400 levels for delivery. So it's a good stock to hold on to from a short-term play.
Well, Deliveries launched its on-demand intra-city shipping now in both Mumbai as well as Hyderabad. And yes, the stock has been doing well off late. We were flagging of Britannia. They've hired the ex-CEO of Anik Milk now to head their dairy business. And he's going to be heading it now with immediate effect. Sandip, you've been tracking Britannia for years now. Do you think the next pivot for Britannia will come in from the dairy segment?
Yeah, so many of the products are dairy linked, but I think it could be a growth driver. But Britannia stood out from many of the other consumer companies in terms of sustaining margins, actually growing at a time where their consumer space has been stagnating. So I think if the overall sector is going to see a revival, then I think Britannia could do much better. So I would be constructive, and we've been holding it for many years. So I'm positive only on the core business as well as direction of the company.
But you have doubts about the whole sector actually picking up?
No, I think there'll be a pickup in the consumption side. There has to be, because we have had almost 3 years of slow consumption because of earlier high inflation, then the companies passing on prices, and then a lot of other niggling issues. But I think many of those things are behind. Inflation is down, GST cuts are there. So there will be a revival cycle for sure.
So Britannia, and would it be Unilever, ITC, etc., to or a Dabur, Marico?
So Marico also has stood out like Britannia, like they have done well at a time when the other segments have not done well. So I think that stock's done reasonably well. But many of the others are subdued. So be it Dabur or a HUL, like you said, or a Godrej Consumer, Tata Consumer. So I think many of these stocks will see a revival cycle.
Very interesting. Okay, Kanishka.